Welcome, everybody. My name is Michael Camo. I am Director of Content for T3 Live, and I am wondering if the world is about to end. So, of course, I had to bring in the man, the myth, the legend, JR Romero from the Momentum Express VTF to help me figure out what's going on in this universe. So, JR, I want to get right to the point. So, on the 18th and the 19th, you were talking about on Twitter specifically a liquidity crunch. And now we're seeing crypto's in the gutter. Nvidia beats, has great guidance, falls apart. What's going on here?
We're going for a ride is what's going on. It was a wonderful day for day traders yesterday. I mean, it's hard to be mad at a chart like the SPX yesterday. Can I share my screen?
Yes, you may.
Do you not want it? We don't have to get technical.
We want it all. JR's pulling up screens. While he's pulling them up, guys, go to t3live.com/Black Friday. Black Friday deals are live. You can get JR's ideas live in the Momentum Express VTF. Again, t3live.com/Black Friday, and the link is also in the description below. So let's bring up these beautiful charts. So JR, what the hell is going on?
Yeah, so we've been warning our users, our members, and our Twitter subscribers that the market is in the midst of dangerous distribution top and a potential liquidation break under 65.52 with a potential round trip to 62.11. It's a bit of more of a complex head and shoulders here, but you can see we had kind of a nasty piercing engulfing reversal yesterday, where everyone was all happy. They're talking about the AI trade is saved. The rally continues. All these ponytail dudes in their mama's basement in their pajamas started buying Oklo and RGTI again in the pre-market, and everybody got hammered. So, we were very cautious yesterday morning. I told my members there's a distinct possibility that they sell this news, guys. This market is due for a retest of the neckline here at 65.52. And we had, in the NASDAQ, at least a 4-day range, a 400 basis point range, so 4 percentage points there. Top to bottom, tip to butt, as they say, and we closed under that neckline there at 65.52, and we're currently struggling to hold that level. So there's a lot of things going on in this market, and I think a deep misunderstanding of what they're calling an AI bubble, which it isn't at all. The thing we're going through right now, and I think our market analysts, our captains of industry, and our investor base is far more sophisticated than they were in 1999. And I don't think they're giving them much credit, to be honest. I'm seeing people talk about an AI bubble. And yes, there are multiple tracks. If you're buying RGTI, they got like an apartment in Bed-Stuy with 12 dudes in it. Clearly, this stock should not have a multi-billion-dollar valuation. But that's really not the AI trade. You're looking at Nvidia trading at 37, 38 times earnings. There is no bubble. There is no bubble. I think there's a fundamental misunderstanding of how AI works, a fundamental misunderstanding of the economics and the capex cycle of the AI trade. AI is really different. I don't know if you remember in 1999, they were lighting up the globe with fiber from Global Crossing, right? And that was a very traditional capex spend cycle where you invest in equipment, right? You have all this capex and you measure ROI. That is fundamentally different, and this is why I'm so frustrated. I listen to all these talking heads on CNBC, and they ought to bring somebody in with an actual computer science degree and engineering degree to explain to them how different the AI spend cycle is from, say, buying sewing machines at a mill. It is completely different. Sorry, you look like you want to say something.
Did you ever see the movie Nightcrawler with Jake Gyllenhaal?
No.
So it's about this freelance news cameraman who figures out that the biggest news stories come from like horrifying crime stories. So he goes around and he starts setting them up so he can cover them and make money. And I do think that's a huge problem with financial media is the bubble will pop is a very sellable story. And also, you know, I was thinking about it. I was out on my morning walk this morning. Do you know why I think there's an AI bubble? You know what that really means? That's another way of saying I've missed out.
Well, you haven't, sir. Nvidia's going much, much higher.
Yeah, I mean,
uncomfortably much higher. When it's
yeah.
at 1,200, you're gonna ask me why didn't I buy it at what is it 176?
Okay, all right. So Nvidia is going to 1,200.
Eventually, yes.
Okay, all right. That's Greta, print the subject line. Nvidia is going to 1,200.
Oh my God. I mean, I'm talking about the next decade.
Yeah,
Yes.
yeah. I mean, yeah, I do think, yeah, but there's no room for nuance on TV. Like, if you weigh the pros and the cons, you weigh the pros and the cons, and everybody's asleep.
I just realized I went full Peter Schiff without realizing you're going to quote me on this now.
Listen, I did not provoke that price target, but I do want to.
I should have known better. That's
Yeah,
on me.
but you know, have you ever heard of Rev Shark? Who you know he's a big writer for The Street, and you know he's a big technical guy on Twitter. I remember once he said low quality stocks are stocks you don't own that are going up, and you know I really think that's the case with AI. You call it a bubble because you haven't made money from it. I made money from AI like by accident, sort of, because I own like nuclear stocks and I own Google. But like, listen, I've missed out on. I sold Nvidia at 100.
We have an industrial point of reference for the technological capex cycle where your capex has a complete linear relation to your eventual profit margin within a product cycle, and basically it's somewhat immutable unless you buy more things. What I think analysts, not all analysts, obviously, like Dan Ives and a bunch of other analysts get it, but the capex cycle is completely different in AI. The reason for that is because right now we're working on inference models, right, and heuristics. We're starting to achieve a different kind of model that's going to be layered on top of the inference model, which is the reasoning model, right? AI is eventually going to start reasoning. That compounds your compute needs. And it doesn't just add to them; it compounds to them. So the more it works, the more you spend on it, which is obviously, as you can imagine, very bullish for AI-related stocks. And we're just touching the little tip of the iceberg there, because and I'm frustrated with Jensen Huang because he's a very understated guy. I don't know if you've ever watched his presentations. It looks like an engineer made a PowerPoint who's never touched PowerPoint before. You know what I mean? They're so incredibly understated and so technical that I think the street misses what he's saying. He said it during his last presentation. This growth isn't linear, but he didn't explain so well why it isn't linear, okay? Because once we get to the inference model and it starts to work, you multiply your compute needs, okay? And on top of that, right, once you add a reasoning model on top of that, okay, the more you spend, the more efficient it gets. And the more efficient it gets, the more you spend. So it's a spend cycle unlike which we've never seen before, which is why I think that people are calling an AI bubble now have no idea the kind of planetoid bubble we're going to generate. But I don't know if I would call it a bubble because it's actually going to start generating results immediately. Traditionally in 1999, when we said the internet is the future, we didn't quite grasp how it would be the future, and we were correct, right? But we were still in complete discovery mode as to how these things would help us. That is no longer the case. So the traditional ROI model from which we base the bubble is completely incorrect. The street is completely missing the point here, right? And then we haven't even talked about the entire compounding across the value chain and what that's gonna do when we add a reasoning model on top of the inference model. It's gonna require exponentially more compute, which means, of course, more Nvidia GPUs, right? And I'll remind you, Nvidia is trading at a very low multiple. It trades at a lower multiple than Walmart. So explain to me how this is a bubble. Go ahead.
I have to push back a little bit because I do think Jensen Huang is actually a very effective salesman. I think from what I see, it seems like he almost mostly does it on the earnings calls, where it's like I feel like they save up the bear cases, and and attack them head on. But I mean, yeah, okay, all right. So hypothetically, we can imagine AI having this beautiful long-term growth cycle, but does that mean these stocks are buyable? Now, like Nvidia is trading at 25 times earnings, but in April we saw it go down to 20. I mean, do you think in all, I mean, also it's obviously not all companies are Nvidia, because Nvidia seems like it's obviously the purest play, and it doesn't have as much baggage as the stuff like CoreWeave. But I mean, can you actually buy AI stocks here? That's the question I have for you.
I think part of the ecosystem, yes, absolutely. Remember, we're going from until 5 years ago, right? What was computing? Computing was a way to crunch data in a purely retrieval-based manner. So you have an Excel spreadsheet, or you're watching a movie on Netflix, or you're playing a video game, and all you're doing is retrieving information, right? So your investment, your CapEx cycle, and your ROI were pretty much fixed to how much stuff you could sell, right? What Jensen basically was saying during their presentation that I really feel like most people didn't get is that we're going from a very fixed model that's linear to a completely different model that's generative and industrial. We're talking about, why do they call it AI factories? It's because you're actually going to be dealing in the currency of generative power. You're going to generate everything from films and on the entertainment realm and video games that you write once, play once, or whatever, to really, really complex mathematical algorithms, DNA sequencing, et cetera, et cetera. And the new industrial revolution is really going to be the AI factory, where we're no longer retrieving software like we do today, right? You load up your charts, you're running a retrieval algorithm, you're loading a binary, and you're running, okay? To completely generating whatever data sets you want at an industrial scale. So when I see where NVIDIA is priced today, to me, it seems like the revolutionary character of what's happening is not being completely comprehended by the market. Dan, I said this was a productivity revolution. I think he understated his case. This is an industrial revolution at a scale that we've never seen before.
Yeah, I do. All right, so some comments. Carl is telling us in the chat, agree there was no bubble. There are surely some overhyped smaller companies, but that's it. Zan Darkstone is saying no bubble yet. We are in the second inning of the game from technology perspective, in his opinion. I mean, but do you think the broader markets being in sort of this precarious spot and, a lot of uncertainty over the Fed, can that keep equity prices under pressure, even with this AI spending boom coming on?
I think that we fundamentally have misdiagnosed the problem with the market, and that's the case I'm making today.
Okay, what's the problem with the market?
So we've been talking about the AI bubble getting out of control, leverage getting out of control, these quintuple X leverage ETFs causing serious problems for inexperienced investors are surely going to be on the ugly end of a margin call soon. And that is all correct. But in my opinion, we are, number one, grossly overextended in a market that has endlessly bought the dip since April, are in very dire need of a corrective pullback, right? And to get one in the third year of a bull cycle for 10-15% is not only not abnormal, but highly desirous in terms of the overall biomechanics and health of the market. But also there are some very serious concerns. I mean, Trump is at the Supreme Court here contesting his tariffs. If they take them away, that's going to be very, very, it's going to cause a lot of volatility in the market. We have a very serious geopolitical situation with Russia and Ukraine that has not been resolved. Our trade war with China presents very serious fundamental problems for our national security and economy. And there are concerns, obviously, about wages, labor, and inflation, which seems to, remain sticky no matter what. I think those problems will be overcome in time. And I think that it's been that uncertainty that's been dogging this market since what? What happened in October that began this distribution top? It was Trump's tweet about China, right? On October 10th, you had that giant engulfing bar that took, a month and a quarter's worth of price action out, or whatever it was, maybe a month worth of price action out. This is Trump right here, right? This was his tweet right there on this chart. So this was a traumatic event in the market, and you can see how important the concern really is, given that a single tweet gave us this kind of action here. So I think it's a mixture of the general mechanisms of the market needing to take a breather, needing to cycle out sellers, take profits, attract new buyers, new money longs, etc. And I think there's these concerns that are dogging the market. But to call this an AI bubble and to say this is February or March of 2000 again, and the party's over is, in my opinion, preposterous. I think it's a completely incorrect read of what's happening here. And I get, like, a lot of people are very traumatized by 2000. I lost millions of dollars back then, so I get it. But I think that's a fundamentally incorrect read of what's happening here. Hold on, I lost volume here. Give me 1 second, Michael.
No, I muted myself by accident.
Okay.
Yes. So I will freely admit I go back and forth on, is this a bubble or not? Now I do get the sense that everybody's desperate for to make a hot soundbite or something that sounds really good on social media. Because I also think that there's a big issue is the bear case always, I don't know who said it first, but the bear case always sounds smarter. So Michael Burry out there talking about, the depreciation schedules and all that kind of thing. And over, when you start talking about accounting problems, you sound smart. Whereas honestly, just saying, AI is a revolution that's going to save companies tons of money and increase productivity. It's a relatively simple argument in comparison. So I do think everybody's desperate for the soundbite, and psychologically, if you haven't been participating in AI, just because of the power of cognitive dissonance, you want it to die. Because people want to be right.
Look, I call Peter Schiff the cicada of the market. He comes out every 17 years. He comes out, makes a whole lot of buzzing, and he's right every about decade and a half. You can be right once a decade and a half, or you can read the tape correctly and make money every day. It's up to you. Yes, counter trend traders, bears, tend to sound very smart, but they're not right very often, are they? Here, I present to you, sir, the monthly chart or the weekly chart of the S&P 500 ETF SPY. Okay, who would you rather be? Okay, I think this chart speaks for itself, right? You're right 1, 2, 3 times, or you can be right all the time. As simple as that. The bull is right every time except for the last time, And the bear is wrong every time, except for the last time. Who would you rather be?
I want to be the smart bear. No, I think it's it's funny. Like I always wonder why they don't ask on CNBC. Like, so is your 401k all in cash?
Can
Because
you imagine if Peter Schiff came out and he's like, "No, I've been long Apple and Nvidia since 2023."
it's actually, when you think about it, it's, as a media personality, you can probably do really well being relentlessly negative in public and very long in private, because you win both ways. You get to be a quote unquote character and build a profile based on that while you're making money in the background. You can't lose. It's actually quite genius.
A closeted bull.
Yeah, like
I like it. I like it.
Yeah, you meet up with other longs, or like in the middle of the night in dark alleys, and talk about, oh man, Nvidia's going to the moon. I'm buying some tomorrow.
You're all in trench coats.
Yeah. Okay. All right. So so when we think about all the near term trouble in the market, with all the quantum stocks, the crypto stuff going to hell and falling apart, I mean, is it as simple as what goes up must come down, and there was going to be even if we lived in an alternate reality, there would be reasons for us to sell off? I mean, is that correct? Like, do you think we're reading too much into all the news?
No. Look, in terms of the fundamentals of the market, there are concerns. There are concerns. Keeping us from going higher here. Purely in terms of purely technically here. If you look at the weekly chart of the SPY, the S&P 500 ETF, you can clearly see that we've, in terms of mean regression, we've gotten really far away from that weekly 200, right? We had even started to get away from the weekly 21. So, the price cycle is a constant fluctuation and regression to the mean. So it's healthy for markets to pull back once in a while. A 10 to 50% pullback in this case would be welcome by most traders, I know, because it's a healthy part of the price cycle. Absolutely. But I do believe that the market is greatly underestimating the really strong AI related names. Your Micron, your Seagates, your SanDisks. Look at the SanDisk chart here for a second. People were trying to short this behemoth, and most people got absolutely wrecked. And part of the reason why is because they, like SanDisk. Did you know SanDisk, for a lot of their data center related products, is completely booked for the next 3 years of production? They can't produce fast. Volatile and non-volatile storage fast enough to fulfill the data center capex, which is only projected to increase like 7-fold. I mean, there's a reason these storage names made huge moves, and they're going to continue to go higher.
I mean, I think it is interesting to think about them almost like commodities. Like, is it that much different from uranium when there's growing demand and no supply? But I mean, I think on the flip side of that,
that's my point. Compute is going to be the most important commodity of the 21st century. Okay, compute time. That is the AI factory revolution that the smart analysts are talking about, and these are the components.
Okay, so in terms of strategy, like, are these names like you're looking to accumulate over time just because near-term volatility is so wacky? Do you want to just be like gradually getting in them?
Yeah, I mean, I told my traders, when we see SPX 6211 here, maybe 6137, I'm gonna go on a shopping spree again. You're talking to the guy who bought Nvidia at 89 on the panic last year, right here. We bought Nvidia at 89 and sold it through like 160, 167. I mean, it was a crazy trade. There's certain names that are fundamentally super strong that are going to get dragged down by the next correction. We'll be ready to make some purchases, if you know what I mean.
Yeah, and just an FYI, I'm showing on the screen. This was 1 year ago. JR said Nvidia is going to 200. So JR has been not too bad when it
Not
comes
too
to
bad.
Nvidia.
I have to be careful what I say live with you because now you're gonna be printing. JR said Nvidia to 1200.
Oh no, you're getting the email this weekend that JR's getting.
I'm so
But
screwed.
listen,
Okay.
over the next 10 years,
Yes.
it's due. Listen, if it's real, then it'll happen. Okay, all right. I think Vet Trader has a great tweet here. AI is great, however, power is in short supply for AI electricity draws. So I actually agree with him that almost like nuclear and power related stuff is sort of like the guaranteed money in AI because the
It,
electric grid is
it's the
is
shovel in the gold rush. Yes, absolutely. Also there's a big misunderstanding that people are talking about how the U.S. power grid is not going to be sufficient to power the data center revolution. That is correct. That is why data centers will have their own power plants.
So you think Oklo is going to happen?
Oklo is, I mean, I don't know if you've read the reports about Oklo. They are nowhere near ready. They're still in the prototyping phase. But I mean, the companies like Lockheed Martin can do that now, today. They can power up a private grid of data centers if they need to.
Yeah, it's. I mean, from what I hear, it's like they need the government to open the floodgates because, like, from
There's
my
a
understanding,
massive
it
there's a
takes.
massive regulatory gridlock. It will depend on whether we have one party in charge or the other, and I'm not going to say which because I don't want to get 1,300 hate mails.
I'll say it since you won't. So I
Please don't. My safe word is pineapple. I'm invoking the safe word.
all right. So this opinion is mine, not JR's.
Okay.
I believe I have a 100% certainty Gavin Newsom will be president in 2028. If you hate it, you hate it, and it would not be good. And I'll say this: it would not be good for my portfolio.
It
From
would
at
certainly
least
not be good in terms of nuclear regulatory hurdles.
yeah, because like China, they can put up a nuclear like if China decided now they wanted to have a nuclear power plant, they'd be getting started in like 45 minutes. In the U.S., I think it takes decades.
Do you know how many get installed per year in China?
A lot. I don't know the exact numbers, but a lot.
Yeah. In China, they put up from what I last read over 120 coal power plants per year. That's a lot of power plants.
God, is there going to be a like? I don't even know if it's technologically. Could we end up in a ridiculous? All right, so I'm going to throw out a bizarre scenario. Now, I don't know the mechanics, but could it be possible we end up buying power from China
No.
or like geolocating whatever AI infrastructure over there, quote unquote, secure, because they have power and we don't? Like, is that
I
feasible?
think I think eventually power generation is going to become a bipartisan issue because it's going to become the key national security issue of our age. Whoever leads the AI race will lead and control the world.
Man, is it going to be Skynet? I really hope not.
Well, you know that when it comes to internet innovation, about 50% of it ends up being porn, anyways, and the other half will be probably national security.
All right, so that means we probably shouldn't talk about robots right now. But we should
Probably
talk
not.
about but we should talk about Black Friday. Go to t3live.com/Black Friday. You can get JR's ideas live in the Momentum Express VTF, t3live.com/Black Friday. The link's also down in the description below. You can also email our friend Amber at t3live.com. Put JR sent me in the subject line. So JR, are markets in turmoil? I feel like we should talk about that because I made it the title.
No, they're not in turmoil. We're experiencing something. A lot of people, I thought this was an ancient Sumerian word. Write this down, okay? Because I think we forgot. this term got lost in the sands of time. I had to look it up because I had forgotten what it's called. It's called, I believe it's called, ready? Write this down. It's called a pullback. I believe it's called, I'm reasonably sure it's called a pullback. That's how it's pronounced, I think. I think it's called a pullback.
Yeah, like my grandpa told me he saw one when he was a kid.
You know, I got to ride the tram one time. I saw a telex machine at work. I used a typewriter in college. You know, these are all arcane things. I believe this is called a pullback. I'm pretty certain.
You know what? This kind of reminds me of Freud because, you know, sometimes a cigar is just a cigar. Maybe sometimes a pullback is just a pullback and there's no grand design. This is the fault.
But it does look pretty amazing when you put the Chiron up, markets in turmoil, and everyone's checking you out, you know.
Yeah, I mean, what kind of asshole puts markets in turmoil during like a run-of-the-mill pullback? I don't know why anybody would possibly do that.
But when they get to the third day of markets in turmoil, that is one of my technical indicators to buy anything that moves because the pullback is over.
Listen, you know, like we joked offline, but once Tom Lee is charred and feathered, we're putting all the money in Ethereum. Everything's going into Ethereum when that happens.
Listen, I got my level in Ethereum at 2,600. We're almost there. You want me to show you my Bitcoin and Ethereum levels?
Yes, please.
So 74,684 is my buy zone for Bitcoin. We bought Bitcoin originally at 63,000. We sold 126,000. Trailed out of the last little bit here at 102. And when Bitcoin, if we have a climactic flush through 7,500, 7,400, I'm gonna back up the truck all the way from your office in New York, and you hear beep beep, and I'm gonna load the boat on MSTR. That's my call for the end of the year. I'm going to buy a lot of MSTR because, as you probably know, big funds can't short large enough amounts of Bitcoin in the futures market, so they're using MSTR as a hedging vehicle. And I'm going to be looking for a very, very large short covering rally in the old MSTR. I can't believe I'm saying that out loud, by the way. All my traders are going to tease me because all I do is bash MSTR, but that one is set up nicely for a very significant bounce here. We're very close. We're back into a reaccumulated demand zone here. You know, maybe 115. 125, we get a nice shakeout bar in the base, and it's going to be ready to rock and roll.
Wonderful. Okay, JR, this was
Captain.
Wonderful, as always. Yes, you know what I love about you? That you make me feel like a captain. Like, you make me feel like I'm in charge.
Well, you're kind of my boss. So, you know.
Oh, don't tell them at T3. They don't let me run anything. They don't trust me.
Okay.
All right. Everybody, T3Live.com/Black Friday, T3Live.com/Black Friday. The link is also down below. JR is the man. He's been calling the levels unbelievably well. And his room is also hilarious. Like, I actually don't like going in it because I end up like being sucked in by all the jokes and commentary, and then I don't get any work done. But it is absolutely a lot of fun. So everybody have a wonderful day and good luck out there.
Take care, guys.